the work carried out by the auditor takes the form of the audit report. So this is a document of vital importance. Audit report is a medium of communication between the auditor and the users, both external and internal, and thus it must be free of errors. Hello and welcome. I am Jyoti Arora, tax expert at Clear. We are India's largest tax and financial services platform for individuals. To support us, subscribe to our channel to see all the taxation and finance related videos. Before we start, let's see what are the forms required for the tax audit. Tax audit reports can be presented in two different ways by the tax auditors, which depends on the basis of the law under which the accounts have been audited. For tax audit reports presented under Section 44AB of the Income Tax Act 1961, Form 3CB and other required details are to be reported in Form 3CD. But when a taxpayer prefers to get the accounts audited under any other law other than Section 44AB, that is other than Income Tax Act, then the auditor has to furnish Form 3CA and the other required details are to be reported in Form 3CD. So now, as you saw, that Form 3CD is a common form to be filed by the auditor irrespective of the law under which the books of accounts gets audited, whereas the first form, that is Form 3CA and 3CB, depends on the law under which the books of accounts gets audited. Now, let us see the 5 important things to verify before submitting Form 3CD. First is reporting of address of books of accounts. Now, under Clause 11 of the tax audit report, that is Form 3CD, it is required to mention the address where the books of accounts are kept. Now, it is highly advisable that the residential address should not be mentioned under this clause, and proper address where the books of accounts of the business are kept should be mentioned. It is because that under Section 132 of the Act, it is laid down that any authorized officer can enter the building and the place where the books of accounts are kept in case of any search and survey. If such books of accounts are kept at multiple locations, then the auditor must mention the address of all the locations and the details of the books of accounts maintained at each location. Reporting of closing stock valuation. While reporting the value of the closing stock of finished goods and raw materials, the valuation should be done as per the cost or the net realizable value, whichever is lower. Now, this is according to the accounting standard. So, at the time of valuation, it is very important to check whether all the items are valued according to this standard, which is to be reported by the auditor through this report. Next is reporting of payments referred to in Section 43B. Now, Form 3CD seeks details of liability incurred in respect of provisions of Section 43B in the previous year and was paid or not paid on or before the due date of filing of the return of the income of the previous year. Previous year means the year for which you are filing the return, right? Now, since the due date of filing the tax audit report is 1 month before the due date of filing the return of income, it is practically not possible for the auditor to report if any payment is made after the due date of filing of the tax audit report but before the due date of filing the return of income. For this, CBDT provides that a person may get the revised audit report from the accountant and furnish it before the end of the assessment year, that is the assessment year for that particular year. Thus, if there is any payment after the furnishing of the report which necessitates a recalculation of disallowance under Section 40 or Section 43B, a revised report may be filed. Next is disclosure of change in business. Now, Form 3CD mandates disclosure of the nature of every business or profession carried on by a taxpayer during the previous year. Any material change in the nature of business should be precisely disclosed. The change will include a change from manufacturer or trader as well as a change in the principal line of business. Any addition to or a permanent discontinuance of a particular line of business may also amount to change in the reporting requirements under this clause. However, temporary suspension of business may not amount to change and therefore need not be reported. I hope that you have started taking care of these things while filing your tax audit report. If yes, then please comment yes or clear in the comment section below. Now, non-compliance of tax audit regulations by taxpayers attract a penalty of 0.5% of total sales, turnover, or receipts, or rupees 1.5 lakh, whichever is lower. So this was all about key considerations that you should keep in mind while filing the tax audit report. If there is any query related to the income taxation, then please comment below. We will reply to it as soon as we can. I hope this was helpful. Thank you for watching this video. Stay tuned for more updates. Take care and goodbye.